purpose of this presentation is to respond to common questions and feedback from the previously released Episode 7 Franchisor Rescue and Turnaround presentation. To get the most value from this presentation, it is recommended that Episode 7 Franchisor Rescue and Turnaround has been viewed or listened to. All viewers and listeners should complete their own research and investigations before taking any action based on this presentation. The opinions expressed throughout this presentation are those of the presenter, and while well researched and gained through decades of industry experience, they do not necessarily represent the opinions of FMS Support Services. Unless specifically mentioned, no assumptions should be made about the identity of any individuals, franchisees, or franchisors referenced in this presentation. Welcome. This is Sean Butcher again from FMS Support Services. This is a quick Q&A session to cover some of the common questions received from the recent Episode 7 Franchisor Rescue and Turnaround presentation. And by quick, I do mean relatively speaking, considering Episode 7 went for nearly 5 hours. Some of these questions may be follow-up questions prompted by the previous full-length presentation, or perhaps things that I didn't explain quite so clearly at the time. As always, it's beneficial to watch these presentations in a video format where possible, but less so for the follow-up Q&A presentations, as it's generally just me rambling on in response to different questions. A massive thank you to those that have asked questions, either verbally or in writing, by any of our communication channels. We got more questions in relation to the most recent episode than pretty much all the other episodes put together. And also thanks to everyone that has watched or listened on different platforms, and especially those who shared or left a like or a 5-star review, as that really helps. It was interesting to note that despite being relatively new and having less views so far than any of the main episodes, Episode 7, Franchisor Rescue and Turnaround, has way more likes than any other presentation to date. I'm not sure whether this is just the algorithm being unusually kind, or maybe it indicates that people are seeing issues with franchisors they are working for that need addressing. Just as a bit of a side point, I'm starting to get a bit of a feel for who the viewers and listeners are at this point. Approximately 50% of you are on YouTube. Majority of the remainder are on Spotify, and a few are on Apple Podcasts. Depending on the episode, it appears that between 30 to 60% are from Australia, and the balance are scattered literally all around the world, which I guess makes sense given the popularity of franchising as a business model throughout the entire world. These short Q&A episodes appear to only attract about 20 to 25% of the audience compared to the full-length episodes they are based on. I like to think that this is because I did such a great job covering everything in the full-length episode, but realize that probably isn't the real reason. Anyway, let's jump into the Q&A from Episode 7, Franchisor Rescue and Turnaround. Can the podcast be sped up? Now, I'm aware that I talk a little bit slow for a lot of listeners, especially when I'm explaining a more complex topic. So I have made a bit of an effort to try and talk slightly quicker. However, I think I will possibly always be a little bit on the slow side, especially over the main longer episodes. Although in these Q&A presentations, where I try and provide a shorter, sharper response, I'm a little quicker, I think. Anyway, if you're listening or watching on YouTube, which is about half of everybody, then you can go into the video and click on the settings, which is up the top of the video, and then playback speed. You can then adjust the speed. About 1.25 times might be about right for most people in a hurry. In Spotify, which is the second most common medium, then it is down the bottom left of the video, which will be about 1 times by default, but click on that and adjust as you see fit. On Apple Podcasts, then I think it's basically the same as Spotify. Go into the audio play, check down the bottom for the speed, which will say about 1 times by default. Click on it and change it. All right, next. Am I against franchising? I seem to get variations of this question after every single episode. which is either people concerned that I'm killing my future in the industry, people who are doing franchising in a dodgy way, telling me to shut up and stop exposing their dirty little secrets, not necessarily in such kind words, or people in good franchises worrying that I am giving the whole industry a bad name, which may affect them as well in good franchise networks. I'm trying to get away from this reputation a little bit. However, please remember that the most recent presentation was called Franchisor Rescue and Turnaround, which naturally means each discussion point largely started from something that was being done wrong or that gets poor results, and you might see in a franchisor requiring rescue or turning around. It certainly doesn't imply that every franchisor or even the majority of franchisors would be doing those things, just that they are common traits I have seen of franchisors in trouble. If the most recent podcast was called Franchisor Success Stories, of which there are quite a few other podcasts by others that do cover this type of topic, even in every single interview with a different franchisor success story, then naturally it would have been more upbeat and positive. But I explicitly want to cover topics that others aren't already doing, not topics already done well by others. Anyway, different aspects of those comments and feedback weigh differently on me. Firstly, when it comes to my future in the industry, I only want to work with ethical franchisors who are doing the right thing by their franchisees. Even if they are struggling and maybe don't have it all together yet, that is fine, so long as they genuinely care about the success of their franchisees and want to do the right thing by them. I don't want to work with franchisors who believe that they win through churn and burn or screwing franchisees over, or even franchisors who consider failed franchisees collateral damage on the franchisor's road to profitability. So if I drive the unethical franchisors away from myself up front, then that saves me time having to filter them out. Secondly, if you are a dodgy franchisor who wants me to shut up, then too bad. When your core business is ripping franchisees off and screwing them over, I couldn't give a what you think. Just be glad I don't name and shame you. Also, be glad the audience is only in the thousands and not much, much higher. Although, if I can assist even a few people by equipping them with some knowledge to stop them falling victim to your practices, then I sleep much better at night. Thirdly, to the good franchisors who worry that I may be negatively impacting them and the franchising industry as a whole, I would say up front that I think you're really overestimating the reach of this podcast. As at today's date in early April 2026, the top podcast in this series, which was episode 1, Franchise Buyer Beware, has about 5,000 downloads across all platforms combined. Now, once you consider that a chunk of them are probably my mum, the remainder are scattered across the entire world, with only between 30 to 60% from Australia as far as I can see. Now, compare that to the weekly exposés being run on current affairs shows and by news organisations, or last week's very public comments by the ACCC, which are all very accessible in any internet search, and I'm fairly insignificant. However, beyond that, the industry would do a lot better if it simply acknowledged it does have a problem. I mean, the problem was so obvious we had a parliamentary inquiry into franchising in this country not so long ago. Like a lot of parliamentary inquiries, it solved absolutely nothing, but it sure as hell indicated there was a problem so big and bold that it couldn't be ignored by the federal government any longer. The good franchisors and the industry as a whole are being tarnished and dragged down by the bad franchisors, not the people that talk about it, most of whom, incidentally, are the victims, the franchisees, their staff, friends, family, and relatives, or others choosing to give franchisees a voice. There is no hiding it. There is no getting away from it. Maybe it's about time those franchisors in the industry who do genuinely have ethics and do genuinely operate with the best interests of the franchisees at heart stop being so damn diplomatic and saying, oh, well, they're doing franchising their way, and start calling out the scumbag franchisors either publicly or privately, and putting pressure on them to change their ways, rather than hoping it all somehow flies under the radar and pretending everybody is on the same team just because everybody calls themselves a franchisor. If you've been in the industry for a while, and particularly if you've worked across different franchisors or spoken to different people who have, then you know exactly the type of bad franchisors I'm talking about. One last point. The purpose of this series is to try and help people in the industry by sharing my experience and the experiences of others that have been shared with me, and provide proven strategies in a way that it might hopefully be useful. Where I do talk about a problem, I do try to give a greater portion of my time to recommending solutions, so it isn't all negative. Now, does this type of discussion put prospective franchisees off franchising altogether, or just help them be more astute and critical in evaluating the best franchises to be involved with? If it does make franchisees more astute and critical, is that a good thing for good franchisors? Because it eliminates bad franchisors from the list of opportunities that prospective franchisees may be looking at? Are more astute and critically thinking franchisees a healthy and positive thing for good franchisors? Is it about time that good franchisors started to be differentiated from the dodgy and bad franchisors? For me, the answer to all of those questions is yes. All right, moving on. How do franchisors end up in a position where they need rescuing? Now, that's a good question. I guess the reasons can be many. There are certainly the circumstances beyond the franchisor's control that have an impact, such as economic factors, COVID lockdowns for those that had the unfortunate pleasure of dealing with them, dramatic changes in the market, substantial new competitors, and all the usual things that you will hear affecting all types of businesses. However, from what I have seen and from speaking to others in similar situations, a majority are primarily franchisor induced and may be exacerbated by other external factors, although convincing franchisors of this can be a bit of a tough challenge. And by that, I mean it is the franchisors primarily doing franchising wrong. And this can be a slow creep. Some of those franchisors can even go forward for a while before they start going backwards. We covered a bunch of fairly specific problems that franchisors may have in the main presentation, which was episode 7. And that included things such as problems with the model, poor relationships with franchisees, underdeveloped or poor franchise processes, ineffective support teams, breakdowns in relationships with third parties, especially landlords, low caliber franchisees, and unwillingness to change and evolve. However, in my experience, most franchisors will have all of the more specific problems we covered. So I guess the question really is, what is the root cause of all of this? Generally, I find if you trace it all back to the root cause, you end up with one of a few different starting points. Firstly, franchisors going into franchising way too early. I recently went to a franchising expo and was amazed to see the huge number of franchisors that were there trying to rustle up new franchisees that had only been in business for a very brief period of time, some less than 18 months. And they may even have only had a single location or franchise before deciding franchising was the fastest way for them to expand. Their models were often half-baked at best and completely unproven on any real scale, and they were often just an inferior version of similar groups already operating. There was nothing proprietary or wonderful about them at all to justify moving into franchising so quickly. Yet here they were trying to sell the dream to prospective franchisees. And this is a great example of why I said they may go up before they go down, as potentially they will convince some franchisees to invest. The franchisor will therefore believe they are doing great, and then it will start going backwards as their unproven, often half-baked models will not deliver the dream to its franchisees. Hence, angry franchisees walking away, lawsuits, bad reputations, lost revenue for the franchisor, and difficulty selling more franchises and moving forward for the franchisor as well, amongst many other problems. Secondly, when we're looking at the root cause, and I found this is a more recent phenomenon of the last 2 decades, is people at the top of franchisors in the C-suite positions, including CEOs and also boards, who actually have no franchising experience, combined with no relevant industry experience. So they don't know how to manage a network of franchisees effectively, and they don't know what it is they're in the market of selling. Maybe you could get away with lacking one of these areas if you are very perceptive and a fast learner, but missing both is a recipe for disaster. As I've said before, franchising is like going into business with hundreds or thousands of business partners you would never normally go into business with, who have all paid a lot of money for a seat at the table. They can't be managed like employees. They can't be managed like contractors or third parties. And while franchisees should always be considered customers of the franchisor in a way, they are a very big ticket, high value customer who pays usually hundreds of thousands of dollars up front and then thousands of dollars every week, depending on the size of the franchise. So that adds up to a very unique dynamic like nothing else. When you don't manage this dynamic right, it quickly turns into a disaster, just as any partnership does, when there is a lack of understanding, respect, and courtesy from some partners. And when I say partners, I say that intentionally, as despite using terms like franchise partners to describe their franchisees, a lot of franchisors treat them like subordinate pieces of shit who should just dump their money in the hole and walk away content. So imagine how that works out. It wasn't always like this. Traditionally, franchisors were usually the founders of the company who had built it from scratch. They knew the business intimately and built it location by location. They valued their franchisees, appreciated that they had placed their trust in them, and understood what it was like to be operating as an individual location, as they had actually done it themselves. Now, I'm definitely not saying that franchisors need to be founder-led, as that often has its limitations as well. But it does usually mean they at least empathize with the franchisees and they value them. Thirdly, as a root cause, and this flows on a bit from the last point, is you have franchisors who don't actually get the basic model of franchising. And for those in the cheap seats, I'll say it really clearly. In order for the franchisor to win, the franchisees must win. Franchising done right is a win-win situation. The franchisees need to win first and they need to win big. Seems pretty obvious, huh? However, I can tell you 100% that in the back rooms of a lot of franchisors, they don't think like that, despite saying publicly that they do, because that is what everybody says. And it's usually driven by people that don't truly understand the dynamic of franchising. They then develop their own model, usually churn and burn, which I'll cover in answer to the next question. It can work in the short term, but long term, it has very limited life because the focus is all wrong. So then, the next question. So, what is churn and burn franchising? Churn and burn isn't an exclusive franchising term, but basically means the franchisor is trying to make its money out of getting new franchisees into their network, bleeding the franchisees dry, allowing the site to fail, or potentially even taking back the franchise from the franchisee when they fail, and then selling it to another prospective franchisee, or alternatively just selling another franchise site in a different location to a different prospective franchisee to keep the churn going. They make their money out of turning over franchisees. They expect franchisees to generally fail. It's just a matter of how long it takes and how much money they get out of the franchisee before it happens. They consider franchisees very expendable. When franchisees do fail, the franchisor is set up to generally ensure it doesn't suffer too much and can often capitalize and profit from the franchisee's failure. When the core strategy is churn and burn, this then affects everything that a good franchisor would normally invest in, as the churn and burn, franchisors aren't going to invest in those things. And by this, I mean things like training, marketing, good supply chains, quality operational support, good IT systems, new product development, and all the systems and processes which would normally optimize a franchisor and franchise network, because these just aren't a core concern of the franchisor. Sure, they will have these things, everybody does, but they are token gestures of low value to the franchisees. Instead, their focus and investment is into slick sales techniques and teams to sell more franchises to new franchisees, maximizing the revenue they can make out of each franchisee through upfront fees, weekly fees, with limited investment back into supporting the network, large product rebates, hidden additional fees, and large exit fees if a franchisee is actually able to sell their business, or more likely has to close it down because they have run out of money, in which case they will usually pursue the franchisees for all the fees they would have had to pay for the life of the franchise agreement, which is usually 5 years. Generally, this bankrupts a franchisee if they weren't already bankrupt. These churn and burn franchisors are very big on legal enforcement of franchisor rights on franchisees and have big legal teams, normally supported by even bigger law firms. I consider this is not only unethical and dirty, but long term, it has a very limited life. You can only trick, con, and screw so many people over before you get a reputation, especially when all the people you trick, con, and screw over are going to hang around for a period of time as franchisees. They're all going to talk, they're all going to share war stories, and become very toxic as a result. These churn and burn franchisors can be identified from the outside, usually by a large number of closed franchise locations across their history, especially recent history, which I say should practically be zero, and a large number of franchise locations that have been through a large number of franchisees, the majority of whom weren't able to sell their business, or if they did, sold it for practically free, or otherwise failed, walked away, were locked out, breached out of the franchise network, or went bust, especially if the turnover rate is averaging a couple of years or less. The alternate model and the win-win model franchising should be about, and used to be much more about, involves a situation where very few locations close. As I said, practically zero or definitely less than 5% maximum. And the turnover of franchise locations is because franchisees are selling their business for at least what they paid for it, and preferably much more, because they believe it is the right time for them to sell, not because they are desperate. You will see many franchisees staying for the long term and extending their franchise agreements into new terms of 5 years plus. Franchisees will be purchasing multiple locations because they see the value in the franchise brand. Franchisees will bring their friends and family into the network for exactly the same reason. And the franchisor sees its primary revenue source as a percentage of each franchisee's success through weekly franchise fees and potentially some reasonable upfront costs and product rebates, rather than massive upfront fees, crippling product rebates, sneaky fees, and last-minute exit fees designed to ensure franchisees leave with absolutely nothing. These franchisors genuinely care about and understand, not just make up BS, about franchisee profitability. They're in the relationship for the long term. They bend over backwards to know their franchisees and their businesses. They make sure their franchisees are succeeding, happy, and making money, not distance themselves from such things. Okay, next question. How does a franchisor in trouble without available funds or lines of credit get investors or cash injections? The hard way, I guess, is the answer. Unfortunately, all traditional lending sources such as banks are probably going to be out of the question by this point if your franchisor is in need of rescuing or turning around. Loans or possibly additional investment from directors, substantial shareholders or owners, and others with a vested interest is probably the most common and fastest method I've seen. Otherwise, there are a whole range of different non-related investors out there in the marketplace who will specifically look for distressed companies to invest in and or potentially lend money to. This often means private equity, high net worth individuals, or potentially other companies looking to invest. However, this will be a slower option. These outside parties will generally, and quite rightfully, want to see a good turnaround plan and will often be quite skeptical given the franchisor's existing track record. They will ask a lot of questions, do due diligence, and many may walk away from the table after you've invested a lot of time into giving them what they've asked for. They potentially will want to inject their own trusted people into the franchisor hierarchy, maybe even replacing you. They will often want seats on the board and to be heavily consulted and involved moving forward. Most importantly to consider, though, with these outside groups is that their investment and cash injection is going to cost you. It will be a commercial decision for them. And if they are taking a risk on your struggling, failing franchisor and franchise network, then they are going to want big returns one way or another if it pays off. That could be that they now own a large share of the franchisor or big interest in repayments on the money they have lent, potentially both. If that doesn't work for you, potentially there are lower tier lenders. These aren't banks or credit unions. They are the lenders who charge massive fees and interest in return for taking a risk on you when nobody else will. They will want personal guarantees from everybody involved and potentially your soul. It's not a cash injection or an investor as such, but there are often opportunities available to extend existing lines of credit to free up some funds, often without too many questions being asked. This could include things like existing overdraft facilities, corporate credit card facilities, supplier trading terms, maybe even negotiating to delay payments on significant accounts for some short-term relief. Every little bit can help, so it's worth considering these options as well where available. Now, this certainly isn't financial advice, just some high-level possibilities to consider. Decisions around these options need to be made extremely carefully and in conjunction with your financial advisors, accountants, chief financial officer, and anybody else significantly involved or capable of providing intelligent insight. Whatever you do, don't just pick one of these options willy-nilly. You may live to regret it later. Next question. When taking over a franchisor in trouble, is it advisable to appoint a franchisee council or franchisee representative body? Now, for those that aren't aware, a franchise council or franchisee representative body is fairly common in a lot of franchises. It is a small group, usually of elected franchisees, whose job it is to meet and represent the concerns of the franchisees to the franchisor at regular meetings and act as a bit of a conduit between the franchisor and the franchisees. They're meant to have input into strategy, planning, as well as execution of different franchisor strategies. I know that in the spirit of democracy and elected representatives, I should probably say that this is a great idea. However, truth be told, I've seldom seen it work well, and I've watched many franchisors grapple with trying to make it work in many different ways over the years, even in very good quality franchisors and franchise networks. My biggest problem with it is that it generally slows things down a lot, which, if you are not in a hurry to do anything, may not be such an issue. But if you are in a race against time to try and save a franchisor and franchise network, adding an additional layer of bureaucracy, governments, and diplomatic processes is probably not the best idea, especially when you consider who you often get elected to these franchisee council positions. There are often the difficult, argumentative, and angry franchisees. If you say the sky's blue, they will say it's red. The social butterfly franchisees who just want to chat and go to lunch. Often the franchisees with limited real knowledge, but heavy on opinions based on their limited understanding. The lucky franchisees who don't really know what they're doing, but got lucky with their location and have themselves on a pedestal because of it now. And the ass kissers who just want to try and get some preferential treatment from the franchisor by going along with everything they say. Then you frequently have the problem of franchisees who are only really considering their own limited experience in their location and assuming that applies to the whole network, which isn't necessarily their fault, just a result of not having an appropriate level of exposure to really represent the entire group. If you have ever watched an elected group of people, such as Parliament, attempt to implement anything quickly or determine a meaningful course of action, you understand why a franchisee council could be a challenge to get any real consensus. And that's before the franchisor even injects themselves into the equation. So, at the end of all of that, you often end up with a few common problematic outcomes. The franchisor often just disregards the franchisee council and does what it wants, in which case, that's what the franchisee council is going to tell all the other franchisees, which obviously goes down very poorly. The franchisee council and franchisor may just end up going around in circles in a desperate attempt to get a consensus on things, often over multiple meetings and months, that could have been resolved unilaterally by the franchisor in minutes if they weren't trying to be diplomatic and democratic. The franchisor may end up giving in to the franchisee council, in which case, assuming the franchisor was actually competent, this may mean that people with very limited experience and knowledge on the scale that is required are now calling the shots. Alternatively, the franchisor may end up deciding the entire franchisee council idea is unworkable and abandons the idea after having wasted a huge amount of time and effort on it. Now, I could probably do a whole episode on how to give a franchisee council the best possible chance of succeeding. But suffice to say, if you are walking into a franchisor requiring rescuing and turning around, you need to think like a military commander in a war. You gather your intelligence, your data, your information from all the available sources, much of which will be your franchisees anyway. You make rational, evidence-based decisions with the highest probability of success. You implement them quickly and effectively without delay through the chain of command. And then you ensure communication is clear. And lastly, you adapt where necessary. In life and death situations, which is basically what a rescue and turnaround is, it is just not the time for circular discussions and democratizing basic decision making. Once your rescue and turnaround of the franchisor has been successful, then maybe consider a franchisee council then. But even then, I wouldn't make this a huge priority. If you manage the franchisor and the support team properly and work effectively with the franchisee network, then each and every franchisee will feel valued and listened to without injecting an additional level of governance and bureaucracy. All right, next question. A lot of franchise networks close many underperforming locations so they can focus on growing their more successful locations. Is this good or bad strategy? For the most part, I definitely do see it as a bad strategy. And the smokescreen or spin around this is just that. Firstly, allowing a franchisee to fail without the franchisor doing everything they possibly can to intervene and prevent it is disgraceful. The franchisor has sold the franchisee the dream and has a moral obligation, if not necessarily a legal obligation, to deliver upon it. Sadly, a lot of franchisors will simply shrug their shoulders and go, oh well, that franchisee failed. And if they can't find a new franchisee, will just let the location close, knowing full well it has just cost the franchisee everything. In my experience, I've had what I would estimate to be thousands of franchise locations where franchisors say the site needs to close. It's beyond hope, it can't be saved. The franchisor has done absolutely nothing and they are all out of ideas. So close it down. I have agreed probably less than 5% of the time. In fact, I'd say maybe only 1% of the time, where something dramatic has happened, such as a town being virtually wiped out by a natural disaster or a massive economic downturn, such as when mining operations suddenly shut down in regional towns. Now, that's 5% of everything franchisors said needed to close, not 5% of all locations. When I've been given the opportunity, everything they wrote off has been spun around and made viable and profitable. Some franchise networks, however, have closed 80 to 90% of everything they've ever opened. This is usually linked to the churn and burn franchisor model I spoke about before, but can just be gross incompetence. Obviously, this looks terrible to anybody paying attention. So the spin is that they are making the network stronger by focusing on the best performing locations, getting rid of the deadwood, refocusing their efforts on things that work. Now, excluding the moral and ethical obligation to the franchisees who now sit in the pile of locations that the franchisor is happy to close down, this spin, as I said before, is just trying to put a positive twist on the fact the locations are failing and you have no idea what to do about it. From a strictly business perspective, the spin may fool some people, and it certainly does fool many people. However, over time, there are a few things you see. You will find it harder and harder to keep existing franchisees and attract new franchisees the longer this goes on. This is partly because existing franchisees try to find an exit and will also warn others off, or the closure and failure rate becomes so obvious that simple spin is no longer enough to cover up the fact the franchisor and the franchise network has a big problem. It will also severely damage the relationship between all franchisees and the franchisor because franchisees will simply feel like collateral damage on the franchisor's path to riches. They will see a franchisor that couldn't care less about its franchisees and is selling a game of chance, not a solid business model. This type of negativity then has a huge impact on morale, the amount of effort and care franchisees and the franchisor support team put into the business, which of course has a very real impact on a large cross-section of results. The other thing I will say is that during the life of many locations, through different franchisee owners and the years, many locations will experience ups and downs. If you just write off locations every time the going gets tough, then over a long enough time period, that is almost all locations. You will have nothing left. There have been a small number of franchisors and franchise networks that I'm aware of that bounce back after closing a lot of locations. But for all the franchisors I've seen use this spin, it is only a handful that ever did actually recover. Most just died a slow death, and many are dying a slow death right now, reciting the mantra that they are somehow going to be stronger after closing a lot of their sites down. Those that did recover normally recovered thanks to a change in leadership and direction, not because they shut a whole lot of locations down. Normally, you will see the leadership that shut all the locations down is not the leadership that led the revival. Anyway, find solutions. They are there. If you don't know how, then reach out to find the appropriate expertise. Next question. How long does it take to turn around a franchisor? No idea. How long is a piece of string? There are so many variables to consider in each situation, especially in terms of what you have to work with, including financial resources, head office resources, caliber of franchisees, the current environment, etc., etc., etc. If you have good financial backing, which I've only ever experienced a few times, such as with private equity, writing blank checks, and a reasonable and cooperative existing team in place ready to go, along with some franchisees ready to grow, then potentially a few months to see some really solid traction and results will be enough. If you're a franchisor with no money, no team, and a bunch of broken and destitute franchisees, then it could be anywhere from 3 to 12 months to get some good traction in an average market. Alternatively, if you have strong competitors trying to wipe you out, it could be double that. However, the biggest thing that can work against you is having no internal support. If you have an uncooperative board, major shareholders, or owners of the franchisor that are refusing to change, refusing to listen, and refusing to allow improvements, then I would say just don't bother. Likewise, if you are in a mid or lower level management position and the people above you, such as the executives and the CEO, are not going to allow things to move forward, then just don't bother. That is the biggest make or break item as far as I'm concerned, and the only one I try and pick as early as possible. I've had spectacular growth results in the hundreds or thousands of percent range and turned massive losses into profits when I've been allowed to do so. Other times, the results were much smaller when I've had to spend my time arguing endlessly for every inch forward with a board, major shareholders, or others who do nothing but throw out roadblocks and cling to their broken strategies and approaches. All right, next question. Is there another way to turn around a business quickly without resorting to discounting? Now, this is a common question, especially from people in the retail, fast food, QSR, hospitality, tourism, and many other spaces as well, ranging from mobile phone and internet providers to people selling their homes and junk on Facebook Marketplace. There is a reason discounting in some form is so popular in highly competitive markets. And this can take different forms. It could be straight discounts, it could be bundled deals with various things included for a single value price, other types of deals or special offers on certain products. It could be rewards for purchasing, it could be buy one, get one free, and the list goes on and on. The reality is that across most competitive industries, almost all businesses do it in some form. However, the reality is also that just about nobody ever wants to do it. So, in answer to your question of can you turn a business around without resorting to discounting, I would say maybe. And this is where it becomes really important to follow a structured analysis and planning process, such as the one I mapped out in 8 steps during episode 5 and briefly repeated in episode 6 and 7. In particular, steps 3 and 4 of this process are really crucial. Step 3 involves breaking down all the components of the business to get at the individual problems that exist. And step 4 involves coming up with solutions to all of those individual problems. If a problem in the business is that you don't have enough customers, then there is going to be a strong reason to consider discounting, deals, or special offers of some type to get people in. However, it would almost never be the only part of the solution. If your business doesn't have a problem with a lack of customers, then there may be no need to consider discounting, deals, or even much in the way of marketing and promotion at all. I once stepped into a franchisor that had locations that were all in high foot traffic areas, such as busy train stations, shopping centers, food courts, airports, etc. A lot of them were losing money, but they had way more people wanting to be customers than they could serve, and wait times would be huge, and then they would inevitably run out of products quite consistently. They also had out of control COGS, poorly managed labor costs, and a massive error rate, amongst many, many other problems. But they didn't have a lack of customers. So discounting of any kind was absolutely not necessary. What was necessary was improved operational processes to manage the customer volumes, which then naturally resulted in extra customers because the locations could then not only handle the current customer load much better, but many more customers on top of that. The location started making sure they were ready for peak times each day, had sufficiently prepared, ordered enough stock, had enough staff and the right staff to handle the peak times. Many increased their sales by nearly 50% almost instantly, just by being able to serve every person that actually wanted to order from them and was there waiting to be a customer all along. Combined with improved staff training, better systems for COGS and labor controls, these were the key things that were necessary to make these franchise locations very profitable. And I've seen this type of situation to some extent many times over the years, where all the business had to do was handle the customers in waiting or respond to the leads that were already sitting there being completely ignored. If you aren't even doing that, then there is no point doing any marketing or promotion, let alone any type of discounting or value offers. However, more often than not, with any franchisor and franchisee network in trouble, the reality is that you usually won't have enough customers. In fact, you will probably be substantially below the necessary threshold to break even. Franchisees and franchisor will be out of cash and credit will be maxed out. There are most likely also competitors who will not give up ground easily. There may be a lot of customers in the market who have drifted away from the brand over time, either because they had a bad experience or because they were drawn away by competitors. Most likely, the franchisor and franchisees are operating on borrowed time, and every day is a nail in the coffin. And as much as nobody wants to hear it, you will almost certainly need to do some type of promotions involving discounting or deals or offers of some kind if you want a lot of customers quickly. However, just slapping an offer or a discount together is not merely enough. You need to carefully consider the appeal of such offers and the method of communicating these to attract customers, especially new customers. You also need to consider your gross profit and contribution margin on such offers, the degree of cannibalizing of your existing sales, which needs to be kept as minimal as possible, what numbers of increased customers you will need for a promotion to be viable, and the overall effect on profitability. An example of a bad promotion I recently saw at a franchise network involved a heavily discounted bundled meal with a main food item, small side, and drink, which was slightly cheaper than even buying the main food item by itself. That was only promoted inside each location on posters and flyers and on each location's order at table app. Why was this bad? Well, because it was only being promoted to customers who were already inside the store and were almost certainly going to be ordering before they saw the promotion anyway. This means that this offer was almost certainly cannibalizing existing sales, i.e., customers may have walked in being prepared to order whatever they wanted and then ended up spending far less by taking advantage of that particular deal. Had the same deal been offered and promoted primarily to people outside of the location through social media or roadside billboards, SMS, EDM, or app push notifications, etc., then there would have been a lot less cannibalizing of sales, and the locations would have been attracting a large number of new customers instead, which would mean extra sales and hopefully more future regular customers. I want to do an episode on marketing and, in particular, local area marketing soon, in which I'll try and elaborate on the ins and outs of marketing for franchisees and franchisors. Now, I am sure any form of discounting is not what franchisors and franchisees want to hear. For as long as I've been around, franchisors and franchisees want dramatic results and growth while charging high prices for everything and try to find a marketing strategy that enables them to do that. They convince themselves that if they just developed a brand that is somehow so unique and on trend, then they can do it. Potentially, if you are unique, then you may be able to do that, at least until you're no longer unique and the market provides you with some competition who will inevitably discount and undercut you to take your customers. The car company Tesla is a great example of being unique for a moment in time. For quite a few years, if you wanted an electric car that was anything more sophisticated than a golf buggy, your only option was Tesla. I tried to get one of these 6 or 7 years ago and was told the wait could be up to 2 years. Then the market caught up. Good quality electric cars are now being pumped out by electric car companies like BYD and by traditional car companies as well. So, what has happened to the price of Teslas? They are now cheaper or more discounted than ever, and the number of cars they are selling is reducing year on year, despite the electric car market growing exponentially. So, make hay while the sun shines if you are truly fortunate to be in a situation where you are genuinely unique at a moment in time. But odds are, if you're in a rescue and turnaround situation, that probably isn't you. Most businesses, and especially those in the franchise sector, will find it hard to grow quickly without some strategic, aggressive discounting, offers, promotions, etc., to drive customers to your franchise locations and then keep them coming back. And that's why everybody does it. Customers love to feel they are getting value for money and a good deal and will come back for it and forgive a lot of faux pas and other failures from any business because of it. And that is an important point. Value perception is far more important than actual value, i.e., making the customer feel like they're getting great value is more important than actually giving them great value. So you can and should be strategic with your specials or discounting for this reason. How can you tell if customers feel like they're getting great value? Well, they come in for the promotion. It also needs to be said that the closer customers consider what they are buying to a commodity or interchangeable with competitive products, the more this perceived value will matter to them. I've been paying a lot of attention for years, and for all the marketing teams I've had in different struggling franchisors try to tell me they're going to get massive customer growth with some other strategy in a competitive market, I've never seen any of them succeed yet. In fact, most of them have overseen the dramatic decline of their networks while pursuing some diluted marketing strategy, convinced there is another way to get a massive number of customers while refusing to look at the data or results. Once again, I have to be clear that it needs to be one strategy in what is usually a very multifaceted mix. It is seldom a silver bullet by itself, but a significant one nonetheless. Finally, on this topic, the follow up question is normally, how do you get away from discounting or deals and value based promotions once you start? The reality is that this depends on your market and how competitive it is. It isn't the fact you start on discounting that makes it hard to get away from in most instances. It's a case of your competitors are doing it, your customers are heavily influenced and attracted by it, and in a competitive market, when you're selling something that's pretty close to an interchangeable commodity, you just have to learn to deal with it and manage it strategically, which is entirely possible, and most players have, including the biggest franchises in the world, such as McDonald's, Hungry Jack's, KFC, as well as others outside of franchising, such as supermarkets, hotels, airlines, etc. If they can't get away from it, you probably won't be able to either in most situations. It is not so much that you can't get away from it once you have started doing it. It's a case of you probably never would have survived or succeeded to the same level without it in the first place. Next question. What if I take over a franchisor and then realize afterwards that the model is not viable or margins are too small for franchisees? I get this one, and I've been there. You've been sold the dream by the franchisor, maybe the board, the owner, the CEO, or whatever. We are a great franchisor. Our franchisees are making so much money. The model is bulletproof. And then you take a job with them as a result. Then you find out it's all bullshit. The franchisor is either unknowingly or in many cases knowingly peddling a model that doesn't work, isn't viable, or has margins so small the franchisees will be better off quitting and finding a minimum wage job in a third world country. The first thing to consider is, do you have the ability to implement effective change, or at least argue the case for effective changes and expect to be listened to? This was the entire premise on which episode 7 in particular was built. If the answer is yes, then that is great. Get to work understanding it. Episode 5, 6, and 7 provide a structure and some key considerations for doing this. Then start implementing, or at least campaigning for a plan to fix it, or your responsibilities within it, as the case may be. I would say that overwhelmingly, this situation is almost always fixable with the right approach, strategy, and people involved. Alternatively, if the powers that be at your franchisor, which depending on your position could be the board, the owners, the CEO, the GM, department heads, or whatever, won't listen or have their head in the sand and refuse point blank to pull their head out of the sand and are 100% committed to deceiving themselves, or worst of all, perhaps they know full well that they are peddling a franchise model that doesn't work or is unlikely to work for franchisees, and they don't give a because it basically is a churn and burn scam, then leave. I'm all for fixing anything that is broken, but if the people in charge refuse to let you do it, and you have a conscience, you have morals and ethics, then you would drive yourself into depression trying to battle against that type of situation. You will watch franchisee after franchisee suffer and lose everything. And knowing you are part of that is not good for your mental health, especially in the long term. Also, next question in a similar vein. What do you do if the people above you, the bosses, just don't get what is needed? Once again, leave. Actually, that's probably a bit premature. Assuming this is not a case of your bosses being scumbags, deliberately running a churn and burn model, knowingly screwing franchisees over, and you're dealing with bosses who may just be stuck in their ways, short on knowledge or experience, out of ideas, maybe not even having genuinely realized there was even a problem, let alone looking for solutions, or something similar, which all happens from time to time. Obviously, first you want to clearly report the problems you have identified and are looking to solve. Put your best case forward as to why the things you are suggesting are important and will make a difference. Explain how your solutions solve the problems that need solving. If they make a difference to franchisees, which most positive changes will, then be sure to link this back to how it also is a good thing for the franchisor. It may seem obvious, but many bosses in franchising just don't make that link. For example, a change that sees a franchise location grow sales by $2,000 per week in a network with 10% franchise and marketing fees means an extra $200 per week for the franchisor from that location, plus potentially some additional product rebates if they are applicable, because the extra $2,000 in sales will require extra product usage. Now, that $200 per week is $10,400 per year extra fees for the franchisor. If there is 100 locations in the franchise network and the results applied to them as well, then you have an extra $20,000 per week in free revenue for the franchisor, or over $1 million extra dollars per year. But it doesn't end there. If we assumed a 50% contribution margin for our franchisees, see episode 3, Magic of Contribution Margin, if you need information on that, then each franchisee has added $1,000 per week extra profit to their bottom line from that extra revenue, which is $52,000 per year. In Australia, you could generally expect this will increase the resale value of that franchise location or all franchise locations if we apply this across the board by between anywhere from $100,000 to $150,000. More profitable franchisees means higher value locations, which means the locations are easier to sell for not just franchisees, but the franchisor as well, which means faster growth along with a lot less headaches and all the benefits that come along with having happy, profitable franchisees for the franchisor. As I said before, in my experience, you may think that these benefits are obvious or will be implied and that your bosses will make the links, but I'm continually amazed at how often they don't. Of course, not every improvement will have such a direct and easily calculated dollar value attached to it, but there are many ways to explain even the less tangible or measurable benefits. But ultimately, the best way to win over franchisors, in my experience, is to be very clear about what is in it for them, ensuring it is matched against the additional investment, if any, that is required. When I've been confronted with hesitation or doubt, which is to be expected, I've often had to request to run some trials and case studies, demonstrate the results that come from doing what has been proposed, agree on what is a reasonable period of time, and show the data. Normally, for dramatic effect, I often like to choose the worst performing locations in the network, as long as I have a franchisee who I can work with that wants to do better, especially if the franchisee is regarded as a write-off by the franchisor or the location is deemed unsavable or incapable of getting any better results. It makes it harder for those above you to argue against the results later, if they are even remotely objective, rational, and analytical in their approach. Of course, all of this only works if the people you are presenting the data to are smart enough to read it and understand it, and objective enough to look at it rationally. I've had it before when extremely compelling, or probably more accurately, indisputable data and results from trials and case studies are put forward, and cynical powers that be simply refuse to look at it. Say it was good luck, or because of some other unknown and unidentified factor, because they just can't or won't put aside their personal biases and preference and accept change. If you can't get any cut through, it's time to find somewhere that values your input and ability to get results, as I've said before. Until then, I know that in a very large number of these situations, people will simply switch off as a coping mechanism. And I get that. Hell, there are even times in the past where I went along with the mantra of accepting the things I wasn't allowed to change and doing my best with whatever was left, which often wasn't much. It's not rewarding, and indeed, it's often very depressing to see franchisees suffering and screaming for help that you know you could give them, but your hands are tied behind your back. Sadly, there are a lot of people in head office teams that I speak to which are in these situations. You will get a paycheck each week, but you will either become a very cold, uncaring person or a very depressed person, neither of which is good long term. So start looking for an exit, is my personal advice. Okay, next question. Is the advice relevant to a full range of industries? Absolutely, in a general sense. I try to reference different industries where possible, but no, I tend to focus on industries that are prominent in the franchising sector, which is very heavy with hospitality, retail, fast food, QSR franchise networks in particular, but does also have a growing services component now as well. Obviously, the specifics of how advice is applied will vary between industries. I've worked in a range of different industries over time. I was heavily involved in the security sector away from franchising, but have also worked in education, warehousing and logistics, importing, exporting, manufacturing, and no doubt some others that I'm forgetting. Episode 5, Business Rescue and Turnaround, and Episode 6, Q&A from Business Rescue and Turnaround, were much more generic and relevant, even if your business is not involved in franchising. Whereas Episode 7 was much more franchisor specific because it revolves around how to effectively and successfully manage the complexities of a franchising system, which will be relevant regardless of what your franchising model actually does, but less relevant if your business model is not involved in franchising. However, I would draw people's attention to the disclaimer at the start of each episode, and in particular the main episodes, where it states something to the effect of, this is general advice only and not intended to replace specific and comprehensive advice. That isn't just me covering my ass. That is me saying that the nuances and industry-specific, business-specific, market-specific circumstances are incredibly important to understand and consider before taking any definitive course of action. And the final question: am I giving away all the best bits of advice for free? I do genuinely hope that the advice is helpful and does make a difference. And sure, I can and have charged for it as well, although probably the much more detailed version. However, the difficult part and the part that is really worth the money is not necessarily the advice, it's the implementation. There are so many books, podcasts, consultants, etc., that can dispense the exact same words of wisdom. I mean, half of them just copy each other. Many of them may have never even done what they are talking about or implemented a bloody thing in the real world, which reminds me of the majority of my university lecturers, actually. I'm often amazed by the increasing prevalence of what I would call corporate knobs in the franchise sector, who talk an exceptional game, use a thesaurus full of buzzwords and cliches, but are incapable of implementing even a starting point when it comes to an effective change and improvement. So the real value is the implementation. That's the detailed plan, the strategy, the making shit happen day in, day out. That's the truly hard part and the exceptionally valuable part. Thousands of people can hear the exact same advice. 50% may dismiss it completely without a second thought. 30% may like it, but decide it's all too hard to change and implement new things. 19% may implement some of it and be better off because of it. And 1% may truly maximize the potential of that advice. And it's that 1% who are the exponentially valuable part of the equation. Implementation is where the real value is. All right, that's the end of today's questions. Thank you so much for all the thoughtful questions that were provided by different people. If you have any further questions, please feel free to email us at info@fmssupportservices.com.au for a personalized, confidential, and definitely free response. Otherwise, if the option is available at the point of download, feel free to leave any comments or your questions in the comments section or on Facebook or LinkedIn, where you may have found this link, and I will get back to you as soon as possible. Remember that you can follow us on Facebook, LinkedIn, YouTube, Spotify, Apple Podcasts, or wherever you download your podcasts from. There are plenty more presentations coming up and other stuff for both franchisees and small business owners, as well as those on the franchisor side. If you have any suggestions or requests for topics, please let us know and we will add them to the growing list. If you found this useful, please leave us a positive review and a 5-star rating, as it will assist the algorithms in sharing this with other people that may also find it useful. If you know anybody that may benefit directly, please feel free to share the link with them directly. Otherwise, we will be back again in the near future with another full-length episode, and I will speak to you then.